Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, September 25th, 2019, and we are again in the final hour of the trading day. I mention this each day, but in my opinion, the prices, as close as you can get them to the close of the market, are the most valid prices to make your buying and selling decisions from. And I say that because during the day, the algorithms, the day traders, they are moving prices around. There's a lot of noise. The large financial institutions, the market makers, they come in at the end of the day, move prices around to what they think is the most valid prices. And therefore, that's where I hitch my wagon. I hitch my wagon to those guys as far as determining what the price I should use to make my buying and selling decisions from. So, thank you for coming today. I really do appreciate it. As always, every day I do. I appreciate you coming and investing your time. I hope you're learning something. I hope it's improving your trading. And I hope you're getting some kind of return on your time investment with me. So quickly, we are having a update today in the indexes. The Dow Jones is currently up 169 points, up 0.63. The Nasdaq is up 76.7, about 0.96%, and the S&P is up 17 points, about 0.58%. So just want to make sure everybody can hear me. If you can, do me a favor, say hi, just so I know I'm coming through loud and clear. All right. All right, well, listen, the plan for today, as always, first of all, we're going to go ahead. We're going to run the U.S. legal disclaimer. Hey, Steve, how you doing? Good to see you, my friend. Thank you so much for coming by. Hope you're doing well today. It's always an honor to have you here. Really mean that. And Toby Petty is here. Hey, Greg, sounds good. Okay, good to hear it. Hey, JT, how you doing, my friend? Good to see you. Anthony, buddy, what's going on? Good to see you. Thank you for coming by. And okay, all right, all right. Sorry, distracted there for a second. So, all right, it looks like I'm coming through okay. Thank you, Steve, Toby, JT, and Anthony for coming by. If you have any questions, please let me know, and happy to answer them. So anyway, the plan for today, we're going to run the U.S. legal disclaimer. We're going to go ahead, get that out of the way. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, more importantly, how I'm going to manage them going forward. Then we're going to do a few minutes on trader psychology. I mention this each day as well, but trader psychology, I believe, is the most important skill that you are going to have to learn and master in order to become a long-term profitable traders. You have to get your emotions under control, whether you're winning, whether you're losing. You have to keep calm. You know what I mean? You have to keep it together. You have to be stable. And that's all about trader psychology. If your psychology gets messed up, if your emotions get out of whack, that's when you're going to make mistakes and most likely make the biggest type of errors that are going to hurt your trading account. So we're going to do that. And then after that, we are going to go through my entire watch list, each stock one by one. We're going to take a look at the technical levels. We're going to look at support, resistance. We're going to look at indicators like MACD, RSI. Oh, sorry, doorbell just rang. Moving averages, ATR channels, and we're going to see whether or not we can find a potential setup today that allows us to enter. But ideally, I'd like to see a confluence or a combination of indicators lining up at the same time. I look at indicators as groups of buyers, and therefore if you want something to go up, you want to be in the company of other buyers. And so if you can get 2 or 3 or 4 indicators lining up at the same time, then the way I look at that is there are several groups of buyers lining up at the same time. And again, if you want something to go up, you want to have other buyers around you. And why not have 2 or 3 or 4 groups of buyers around you? The more buyers, the better. And so at the end of the day, if we find something like that, if we find something that has a combination of signals, then I will go ahead and take a position in that at the end of the day. And then after the market closes, if anybody has any questions about anything I discussed today whatsoever, if I wasn't clear on something, you're just not quite getting it, please let me know. Just put your answer or your question in the chat, and I'm happy to answer it and hopefully clarify it. If you have any other questions, about a particular stock that you'd like me to look at, take a look at the symbol. I'm happy to give you my humble opinion. If you have any other general trading questions, happy to do that as well. So that's why I'm here, to try to help people improve their trading and answer questions. So, all right, well, that is going to be the plan for today. So if you can, please hold tight, and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Dustin W484. Hey, how you doing? Good to see you. I don't think I've seen your name before, but thank you for coming by. I really appreciate it. All right, so let's get to it, see what's happening. All right, first position of the day is DDM. Boy, I've had this position for a long time, and I'm not complaining, because the longer I have it, the better it's done, actually. So I did buy DDM back here on the 26th of August. I bought it because the previous bar closed under the 200. The day that I bought it, we closed above the 200. This is a good back-tested approach to trading DDM. Staying out, staying in cash when on a closing basis it is under the 200-day moving average. Staying in as long as it is above the 200-day moving average. This is a good back-tested approach to trading DDM. I put my own spin on it as the regular mechanical approach is just to stay in forever until it closes back under. And that's a good way to go, back test well. But I like to phase out as the market gives me profits. So through this big up move here, I phased out. Then here at the top, we kind of started moving sideways, no phase outs. Did have a phase out today right here at 49.65. I do have some of my charts up and going today, but not all of them. Better than before. Anyway, here's DDM, and you see the green line here. That's where I took profits and took some shares off the table right here. So anyway, I'm glad. I'm getting pretty close to being out of this position. I am starting to run out of shares, especially with hitting this profit target today. So if I hit 2-3 more profit targets, I'm going to be out of this trade. But this was a great trade. That was, from here. Right now, currently, it's right here. So this has been a good trade. This is how these trades are supposed to work, these mechanical trades, where, as the market gives you something, you take it out. You either run out of shares to the upside, and then you're done with the trade, or conversely, if it closes back below the 200, that would be your stop. So just paint by numbers, robot trade. And the key with these trades is that if you're wrong, you're generally wrong small, and if you're right, you have at least the opportunity for a big move like we did here. Okay, gold. Well, gold is my stinker today. Boy, we've had a couple crossover stinkers the last few days where we've gotten in and pretty quickly reversed I did buy this back on the 23rd of September. I bought it when the 5 EMA crossed over the 20 EMA. This is a good back-tested long-term approach. Does not work every trade, right? As we can see right here, doesn't work every trade. But the key with these kind of approaches is, you're going to probably lose more times than you're going to win, but the times that you're going to win, you may have a large move that will pay for all the losses and hopefully more. So I did buy it here Monday, 143.75. Yesterday it did move up, did hit one profit target. This is a good example right here of why I like to have profit targets, because I did take about 10% of my position size off yesterday at a higher level, at a profitable level. At the very least, it pays for lots and lots and lots of commissions, right? Today, because of the news, it seems like the market wanted to put more risk on, so they took it out on gold. And we've had this huge down day here. We did find support at this previous range, like almost to the penny. But this is a mechanical trade, everybody. So as much as I don't like it, I like to have these kind of trades. I like to have discretionary trades. I like to have mechanical trades. And, excuse me, when I took this trade, my decision was this was going to be a mechanical trade. So meaning I am not going to get out until the 5 EMA crosses back under the 20 EMA. If it crosses back under, I'll go ahead, just take the loss. But if it continues to move up, I will continue to phase out until I'm out of shares or the 5 crosses back below the 20. So yeah, this is a pretty big move. I mean, 1.81% for a stock, depending on what stock is, still a big move. But for gold, this is a big move. This is a big move. But again, this is a mechanical approach. So just going to follow the plan, right? And that's what's important. Even if things are not going your way, if you decided on a plan, my advice is just to stick with it, see it through, good or bad. Okay, yeah, we hit that one too, so that's good. All right, so good day on Qs today. We did hit 2 profit targets right here at 189.10 and 190.16. I did buy this back here when the 5 crossed back over the 20. Same approach that I used for GLD, but this one worked out better so far anyway. I did buy it here at 188.30. Another mechanical approach where I stay in as long as the 5 EMA is above the 20 EMA. It's moved up nicely. If we phased out, we phased out, we phased out, we phased out, and did hit one phase out yesterday. So right now, the 5 is 190.26 and the 20 is 190.21, meaning that if the 5 stays above the 20, I will stay in this today. If it closes under, I'll just go ahead and get out. But really happy that I hit 2 profit targets here. So we'll just see what happens. But again, as long as the 5 EMA stays over the 20 EMA, I will stay in the trade. If the 5 EMA crosses under the 20, I will get out. And the reason why is because when you back test the 5 crossing over the 20, in the long term, it's been profitable approach. Does not win every time, but generally the winners are much larger than the losses. You usually probably have more actual losses than wins, but the wins can be outsized wins where the losses are generally small. So, with any type of trading approach, you have to have a plan, you have to have a construct, you have to have landmarks that tell you what to do, because if you don't have that and you're just completely at the whim of however you want to trade, that's tough. I mean, you have to have a plan, and you have to have some landmarks that tell you get in, get out. But right now, the Q's 190.27 on the 5 is still above the 20. Earlier today, it was way under. I thought, okay, I'm getting out of this for sure, but we'll see what happens. All righty. So the S&P, in case we have some new viewers today, I do This is one approach that I take every day, where I buy the S&P each day. At the end of the day, I sell it first thing in the morning, regardless of technicals, regardless of anything. You might ask yourself, why do you do that? But this is based upon another long-term quantified backtest approach to trading the SPY from Liz Ann Saunders at Bespoke Invest on Twitter. With this, you have two options. First option is you can buy the SPY each day at the open, sell it at the close each day. So buy at the open, sell at the close, buy at the open, sell in the close. If you had done this since 1993, you'd have actually returned a negative 13.9%. But if you did the opposite, which is what I do, I buy the SPY at the close every day, I sell it at the open the next morning. Buy at the close, sell at the open the next morning. And I do this every day, regardless of the technicals. And if you would have used this approach, you would have actually returned 634.2%. So there's a huge difference in when you buy and when you sell. Buying in the morning, sell in the afternoon. Since 1993, you'd have returned a negative 13.9%. If you would have bought the SPY at the close, sell it the next morning, you'd have returned 634.2%. Past performance, no guarantee of future results. That's obvious, but I would rather, have a trading plan based on something that had good results in the past than nothing. And you can see the results here are really good. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see there's a huge difference. This has a clear edge that plays out over time. As time goes on, it has ups and downs, just like any other good trading approach. It does not always go up, never, nothing ever, always, even if you have a great edge, does not always go up. Casinos, they have an edge. I think we all agree on that. They have little losing streaks too, but the upward drift, the long term, the edge plays out for them, and that's why they're profitable. That's why they build all these hotels. And with trading, you can do the same thing. But I really like how this chart illustrates long term, the edge playing out, but in between ups and downs. And the important part here is since 1993, we know we're up since 1993, but when you look at these returns, what this says is that all the gains in the S&P have literally come in the after hours, people bidding it up in the after hours, and people bidding it up in the morning and then selling into the close. So, oh yeah, okay. So let me show you. That's one of the charts. It's not working. So now I have most of the charts working, but not all of the charts working. So this ended up being a very, very small gain. Bought it here at the close yesterday. You can see it open just barely above. So basically a scratch trade, but I will take it. I will take it. I've been using this since February 26th, and it's been really nice. It's been nice, profitable returns. It has the ups and downs that I'm talking about, but so far so good. All right, so Square, and this is one of the charts that I'm going to have to switch over, but I did buy Square here yesterday on the 24th at the close. Have hit one profit target today. I bought this because a few things were going on here. I did like this trade. For one, intraday, we went under 30 RSI, closed back above 30 RSI. Number two, we went below this previous range, rejected it, came back up. So this is a false breakout to the downside. And then we also had this V1 where this bar, yesterday's bar washed out the previous day's bar, closed above. So we had it under 30, back over 30. That was signal number one. Signal number two is that we washed out the previous day's low, closed above the previous day's close. That is what is called a V1, excuse me. Really nice valid V1. And in addition, we also washed out this previous low. And if we go over and take a look at the updated chart here, you can see we did hit one profit target today. So that's up nicely today, up 2.3%. So really good trade, really happy with that. All right, SSO. SSO is another back-tested mechanical approach. I sure have had a lot of these. Generally, I don't have this many mechanical approaches, but I did buy this back on the 6th of September. I bought it when the 10 EMA crosses over the 50 EMA. Again, this is another back-tested approach. You heard me earlier talk about the 5 crossing the 20. There's all sorts of different crossover approaches. You just have to make sure that, when you back test different indexes, you look for the back tests that have worked the best. But the 1050 does work well on the SSO. The SSO is the double leveraged S&P. I did buy it here back on the 6th. I only bought a half position because where it triggered, it was over the 1 ATR channel right at the 2. So I have scaled out of this as it's moved up. Currently, okay. Oh. So yeah, so we bought it back here on the 6th. While it was up here, I did scale out of quite a bit. And then today hit one profit target here as well. So with a lot of these moving average crossover systems that I have, they've all been profitable. I've scaled out at higher levels and I'm starting to run out of shares, which I'm, happy. Obviously that's what we want to happen when we trade this. So, still have DDM, still have a little bit of the Qs, and then still have some SSO. All right. Take a look real quick. Okay. Hey, Murit's here. Good to see you, Murit. Thank you for coming. Marco is here. Awesome to see you, Marco. Max B, good to see you. MO, 8.25% dividend yield. I know, it's crazy, right? What a yield on that. And Frank, hi, Greg. Rode the FND rodeo trade and was thrown off with the 3%. Not really a prudent trade, but it was fun. Well, I'm glad you had a good time, and I'm definitely glad that you had a 3% gain, right? 3% gain is pretty good, I would say. Okie dokie. Okay, so listen, this is the time of the day that I like to do a few minutes on trader psychology. I like to look at Twitter. I like to look at a few channels that put out good trading words of wisdom each day, and that's why and I want to share them with you. I hope that by hearing this or a variety of this each day, that it will, you'll start to internalize it, incorporate it in your trading, or at least remember, boy, I remember when Greg said that, and that kind of makes sense. But I'm a huge fan of trader psychology. I know how important it is, and so that's why I want to share this with you each day. But this is from Trading Composure on Twitter at YVANBYEAJEE. Or you just look up Trading Composure. But I really like his channel. He puts out really great information, and I would suggest that you follow him on Twitter and read his things every day, because again, the biggest skill that you can acquire in trading is discipline and the trading psychology. And so by reading these every day, I hope it will drive that point home. But here he says, the one quality which sets one man apart from the other, or one woman, the key which lifts one to every aspiration while others are caught up in the mire of mediocrity, is not talent, formal education, nor intellectual brightness. It is self-discipline. And that was from our previous president, Theodore Roosevelt. And guys, this is true. I mean, it doesn't matter what industry you're in, what occupation you have, but especially with trading, you need discipline. And you guys hear me harp on this all the time, but guys, I've been there. I have been there when I was young. I didn't have control of myself, and it was a hot mess. It was just a hot mess. And I wish I knew these things back then, but better late than never. And so, that's why I want to teach you guys about it, so you don't have to go through the issues that I went through back when I was in my 20s. So, please remember, discipline is important. Come up with your plan. Doesn't have to be the best plan in the world, trust me, but what's important is it's decent and that you follow it, and then you have the discipline. And if you're not following it and you're lacking discipline, you know, do some soul searching of why can I not have the discipline to follow my plan? And if I were to guess, everyone, I would say it has a lot to do with your position size. And if your position size is too large, it's going to amplify your emotions, and you're going to make bad trading decisions, and it's harder to follow plan when your emotions are at a heightened level. So, you know, the one kind of duct tape, one size fits all fix for helping discipline, helping your trading, helping your emotions is conservative position size. So anyway, thank you, Trading Composure. Appreciate you posting all this great stuff here. But all right, so I hope that helps. I hope you guys will internalize that. And let's see. Okay, so I'm going to go down through here. Some of these charts are working. Some of them, any stock that I have is in the S&P 500 is now working on Trade Navigator, thankfully. However, some of the ETFs are not, so I'm going to have to switch back and forth a little bit. All right, so here's Apple. Apple's having a nice day, up about 1.5%. It's too high for me to buy up here. But if you guys have Apple, I'm glad it's going up for you. But I would need Apple to come back down here into the value zone, settle down, look for a V1 or V2 entry. And by the way, you know, I talk a lot about V1s, V2 entries. If anyone's new to the channel, if you go to the description of this video here, you'll see I have links to 4 of my lessons, and one of those links is specifically about V1, V2 entries. It's about an hour. And so, like I said, you're going to hear me talk a lot about V1s, V2s, but if you want to learn a little bit more and watch a video that's very specific about V1s, V2s, it's just in the description of this video here. And it talks about V1s, V2s. So anyway, nothing on Apple. I would need some kind of reset into the value zone, V1, V2, or alternatively, some kind of deep dip back to the 30. Okay, so here is Adobe. This is looking good today. We've rejected the 200-day moving average, closed back up into the channel, and we have a V1 entry. Here is day 1, here is day 2. Today's day, washed out yesterday's low underneath and back up. In addition to just creating a V1, we've also went under the 200, back over the 200, and closing back in the channel. Now, that's all really good. However, this bar here is much larger than 1 ATR, which concerns me. It's a little bit of a red flag. You know, this price action today is obviously very positive, but I'm concerned about this previous day yesterday, this big bar day. We're at a 43.38 RSI. I know that most likely we're going to be hitting some kind of resistance here near the 50 RSI and this 20-day moving average. So at this point, I just don't think the risk to reward makes sense here. You know, if we closed down here and we were closer to the 200, it would make sense, because that, you know, that would pretty much be my stop, would be a close under the 200 or halfway of this bar. But I just don't think the risk to reward makes sense here for me to buy this today, even though it looks pretty. You know, you always have to look at risk to reward and say, okay, where is my theoretical next resistance level? And that's going to be right about here compared to my risk. And so I just don't think it's a great risk to reward. Now, if tomorrow we came back and we held halfway of this bar, then I might take it. I might go ahead and take it, because then I'd be closer to the 200. I have more upside. I'd have more room to the upside if I was right, and less room to the downside if I was wrong. So, you know, I'm kind of tempted on this trade, but I think I'm just going to I think I'm going to just let this go. All right, silver is one we have to look at the other chart. All right, so silver's getting beaten up today. The same with gold. We did have a 5 EMA, 20 EMA cross here. And like gold, it has reversed ever since that. We did find some support here at this previous range. What are we at? We're at a 49.78 RSI. Yeah, I don't think I'm gonna do anything with silver here today because we already have gold. It's down 7.32%, so that's a big move down. So I think I'm just going to stick with the gold and not enter silver here, even though it's still above the five EMA is still above the 20 EMA. But I do have gold, so I think that's all I need at the moment. All right, advanced micro devices. Well, we have been moving sidewards here, and we finally did break yesterday. We had some follow through reversal back today. Looks like we are having a V1, which is good, but the day one bar, the V1 bar, this is larger than 1 ATR. So, this concerns me a little bit. These huge bars yesterday with us rallying back into those huge bars, it does concern me a little bit. So I'm going to sharpen my pencil and be a little bit more selective today. And when you have these big bars, that means there's a lot, these large range bars, it means there was a lot of selling. So don't get fooled into just because you have a bounce into these big bars that, okay, that's over, it's over, now we're going up. I'm very concerned when we have a rally back into a previous bar that's large. So this is a V1, right? Today's day does wash out yesterday's low and looks like it might close above, but it's not enough for me. So Amazon yesterday did lose the 200-day moving average. Now remember, when the prices are above the 200-day, that 200-day generally acts as support underneath. When you lose the 200-day, very likely that 200-day above you is going to act as resistance. So would I buy this here? No, I wouldn't. It did tag the third ATR channel. If I traded intraday, I may have taken a shot down here at the third ATR channel when it was close to the 30 RSI, but I didn't because I'm an end of day trader generally. So it is a nice V1, but of course this bar here is much larger than 1 ATR channel. So I'm not going to take this right now. The way I view this trade is that it's probably going to find some resistance to the 200. If we close above the 200, yes, then I may consider it. But who knows if it's going to close above today, but nothing on Amazon for me right now. Boeing having a nice day, it's just too high. Got close to the third ATR channel. Remember, 90% of prices stay under the positive third ATR channel and they stay above the negative third ATR channel. So whenever prices start getting into this third ATR channel, if I have the position, I'd most likely be looking at selling. Once prices get down here, the negative third ATR channel, I'm more likely to look to buy, but nothing on Boeing today. Alibaba. Huge day down yesterday. We had a bounce today, but we had a bounce inside this huge monster big bar, which I just don't like. So yeah, nothing on Alibaba for me today. All right. DBC is commodity index. We went up high, we came into the value zone, but there's nothing there. DDM we already talked about. Walt Disney. Again, it's a V1. We washed out yesterday's low. Looks like we're going to close above yesterday's low, but this bar is certainly larger than 1 ATR. It concerns me. We have the 1 ATR channel up here. Yeah, I'm just concerned. I'm just concerned to buy into these kind of bounces. I would much rather look for a dip down here about 125.60 or down near the 200-day moving average. That would give me a good risk to reward ratio, and I'd rather buy this on weakness than on strength. So nothing on Walt Disney for me today. Etsy, boy, we lost the 200-day yesterday, and we've had a lot of follow through selling again today, down another 2.79%. I would imagine that we would find probably some kind of potential support here. We are about 50% Fibonacci of this move, and it looks like to close to the penny, that's where it caught support. But we were well above the value zone. Now we're coming back into value. I'd like to see this move sideways. I'd like to see the bars narrow, and then I'd like to look for a V1 or V2 entry back up to possibly test the highs, but nothing on Etsy today. Ford, nothing on Ford today. It's just kind of hanging there at the 200-day moving average. Technically, we have a V2 here, and I'll tell you, this is, we moved up higher. We did come back down into the value zone. We did move sideways. This is a V2. Here's day 1, day 2, day 3. Day 2 did barely wash out day 1, and day 3 is closing above day 1. So technically, it is a V2. But the best V1s, V2s come when you have a big washout of that day 1, and this barely went under by probably a couple cents or so. So I think I'm just going to pass on Ford. Facebook, we had that big move down yesterday. We have another V1, a lot of V1s today. Day 1, day 2 washes out day 1, day 2, which is today. It looks like it's going to close above day 1's close. But again, day 1's close was big. There was a lot of distribution, and so I'm not going to buy this. I'm not going to buy this. For me to get interested on Facebook, we have pretty close to a confluence here of a third ATR channel and a 200-day. If we could come down here, have it go under the 200 back over, or close under the 200 and close back over, that would be interesting. Another approach would be if we could go close under the 250 back over the 250. So you can kind of see where my mindset is. I'm looking for lower dips to buy. I'm not looking for which, right now this looks like a little bit of a bounce of a reaction rally back up. Who knows? It could just go right back up to all-time highs. I have no idea, but my filter on these trades is not to get involved with the V1 or a V2 when days 1 is a large range bar on high volume. 5 below, we made a new high. We had a nice orderly move down into the value zone. We did move sideways. All the things that I'm looking for. Today's a V2. Here's day 1. Day 2 barely washes out the low of day 1, and today is closing above day 1's close. So technically it's a V2, but I don't like that we barely washed out day 1's low. So it's a 57.95 RSI. It's not bad. So I am going to mark 5 as a potential. The very best, I would take a half position because this washout isn't so good. But on the upside, we're closing back above the 10-day moving average. We're above 50 RSI. So we'll look at that at the end of the day. Gold, of course, we bought the 520 EMA crossover. Did dump on us today, but the 5 is still above the 20. I'm going to keep it. Looks like it is off of its lows. Google. V2, day 1, day 2. Thoroughly washed out day 1. That's legitimate. Day 3, closing above day 1's close. It's a good V1. It's a good V2, but now we're too high. We're above the value zone. So, you think, God, Greg, are you so picky? You're never going to take a trade? Yeah, kind of. You know what I mean? Yeah, I am picky. I am picky to what trades that I take. And, everything kind of has to make sense, right? It has to be in the value zone, has to have a good risk to reward ratio. So, I do pass up a lot of trades, but I try to just wait for the best ones. I try to stand at the batter's box, and I really try to wait for a strike to come over the plate before I swing. Goldman Sachs, again, yesterday had a big down bar day. Today, we ran into resistance at the 50% level of that big bar, so nothing on Goldman Sachs. IBB was a horrible trade. Bought that here with, can't remember. Oh, no. Bought that here on the 16th when we have the 530 EMA cross. Did move up slightly for us. I think we hit one profit target, and then yesterday we had that huge move down, had the crossover, had to get out. Is down further today. So, this has been a tough week. It hasn't been like a huge down week. It's just been a kind of a frustrating week with, small gains and a bunch of small losses too. So, but that's how it goes. It doesn't always just go straight up, and sometimes it doesn't just go straight down. Sometimes it just, wears you down with 1,000 paper cuts, but that's trading, everybody. Intel. Okay, so, we did have a V1 today, washed out previous day's low, closed above. It's a little too high in the value zone here. It's a 56.52 RSI, which isn't too bad, but again, yesterday's bar was larger than 1 ATR, so I'm just not going to mess with it. Russell 2000 is having a bounce in the value zone, but again, yesterday's bar, day one's bar, is too big, so I'm just going to be conservative. All right, Johnson & Johnson. I did buy Johnson & Johnson back here on the 18th. We had this nice V1, closed above all the moving averages. We did scale out, and then yesterday I did get out yesterday because of this V1 to the downside, and we lost that previous range. And so today it is down more, so looks like that was a good call. But nothing on Johnson & Johnson today. Coca-Cola is moving sideways. It's really consolidating here. I can assure you this is going to move strongly one way or the other in the future. Problem is I don't know which direction, and I don't know when. But, we moved up high. We came into the value zone. We moved sideways. This is all good. This is a really ideal situation to look for some kind of V1 or V2 at this point, either to the upside or the downside, but nothing here on Coca-Cola today. Lockheed Martin made a higher high, come into the value zone, is moving sideways, so that's good. Higher high is requirement 1. Requirement 2 is you come into the value zone. Requirement 3 is you move sideways. So I've hit all 3 requirements here, but now I need a trigger. I need something to tell me to get into the trade. MasterCard has a decent V1 today. Here is day 1. Here is day 2. Day 2 washes out the low of yesterday. Looks like it's going to close above the close of yesterday, but again, this bar was larger than 1 ATR. Not bad. Let's look at the weekly. Yeah, the weekly, we're back into the value zone. Monthly, definitely an uptrend. Weekly into the value zone, which is good. But again, yesterday's bar was larger than 1 ATR. If this closed above 50 and closed into the value zone, it wouldn't be bad, actually, now that I look at it a little bit closer. So let me quickly do some numbers on this. Okay. So we'll see. To be determined. Altria, have to look at the other charts on this one. Boy, big reversal on Altria. It was under 30 RSI. It's still under 30 RSI. You know, I would consider MO here today if it closes above, if we have a V1, because here's day one, day two washes out day one. If we close above day one's close and close above 30, I would consider that. But only if we have a V1 and we close above 30 RSI. Merck. Nothing going on Merck. Microsoft, really nice V1, but again, here's day one, here's day two. Day two washes out day one. We're closing above day one's close, but yesterday's bar was larger than 1 ATR and we're too high in the value zone. So I'm going to have to just let this one go. Look at Netflix, everybody. What are we at? We're at a 3454 RSI. We are working on a V2 today. Here's day one. Here's day two. Day two washes out day one's low. And right now we are very close to closing above day one's close. Day one's close is 265.92. So we are close to that. We did go under 30, back over 30. I would consider buying this here today, but I would only buy half position because we're under the 200-day moving average. So I'm definitely going to consider Netflix. How are we doing on time? All right. I better hustle. Nike had great earnings. Looks like it's making a new high. Philip Morris decided that they are not going to merge with Altria Group. That's why you have this huge big up day. This isn't extremely positive though. Even though we're up nicely, looks like we're going to close below the open, even though the close is above yesterday's close. So this is kind of a bearish reversal candle right at the third ATR channel and right at the 200-day. So nothing there. PayPal. Again, I don't like this big bar yesterday. That bar concerns me, so I'm just going to let that one go. I think there's better. Qs, of course, we hit the two profit targets. Right now, it looks like we are going to be keeping Qs. Snapchat, going to have to look at that over here. Looks like a V1, but day one's bar was larger than 1 ATR, so we're going to run into a lot of that today. SPY, of course, we're going to buy that at the end of the day. Square, we have doing nicely. We did hit one profit target today, so that one's fine. SSO, we did hit one profit target on that today. Bonds probably down today. Oops. Yes, nothing there. Tesla did rally a little bit, but it's a small rally into yesterday's big down move, so nothing there. Twitter, nice rally today, but again, up against this huge big bar, 50% of the bar, so I don't want to mess with Twitter either. UNG, UNH, nothing there. Oil. Nothing there. UUP, I know there's nothing there. Verizon, too high, nothing there. Walmart, too high. Nothing there. XLF, nothing for me. Real estate, moving sideways, nothing there. Utilities, no. Healthcare, no. XPH, let's take a look at that. No. Okay, so let's quickly go through our possibilities here. Um, Possibility of 5 with this V2 here yesterday. If we look at the weekly, it's still in the value zone, so that's a possibility. Yeah, I'm going to let MasterCard go. Again, I don't like this big down bar, and then looks like the risk to reward's not so great. For RSI back in the value, or back over the third ATR channel. Not too bad. So this really comes down to 5, and it really comes down to Netflix. So again, Netflix, I mean, we have a lot of, we have a lot of things going on here. We have a possible V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Looks like we might close above day 1's close when we did go from under 30 back over 30 and under the third ATR channel back over the third ATR channel. On the weekly, we did hit the third. If I do take this, it will definitely be a half a position. That is for sure. Oh, and Adobe was also. Yeah, I think I'm going to let Adobe go. I mean, this is really strong. It's really great. But again, right here, now the risk to reward ratio doesn't make sense to me because I would either use the close below the 200-day moving average. It's too far down. I could use a halfway, which would help it, but we're still stuck in the range of this big down bar yesterday. So I'm just going to let it go. Let me quickly look at the Qs. So the Qs are hanging in there. Looks like that's going to stay steady. So that is fine. What kind of volume do we have on Netflix? Tell you what, I'm going to go with 5. I mean, this does look good. It just, we had this huge down bar, just this huge move here. I mean, we did have a nice rally today. It doesn't look like it's, at least right now, it doesn't look like it's going to confirm the V2. It's a valid trade, but I honestly only want to take one trade today. I mean, 5 definitely is much stronger. It's holding the value zone. So I am going to go ahead and buy regular position of 5 today at the end of the day. What do we have about? All right, so okay. All right, so our gold position, the 5 is still over the 20, so we are going to keep that. DDM is fine. We hit profit targets there. Qs, we did hit 2 profit targets, and it looks like the 5 EMA is going to stay above the 20, so I will be holding on to that. SPY, will be buying this again at the end of the day. Square did hit that profit target today, so everything looks fine there. Nothing I have to do with Square. Hit that profit target right there, so that's nice. What are we at RSI wise? So right now we're to 39.85 RSI. In the coming days, if we go up to the 50 RSI and lose it, that will be my signal to go ahead and just lock in profits. Yeah, I just think on 5 the risk to reward's better. You know, possibility of getting all the way back up here, challenging highs. This gives me a good amount of reward. If I'm wrong, I'll be wrong very small because this is a washout bar. I basically will be wrong down to here. If we have a close tomorrow under here, I'll be wrong this much with the potential to make this much. So, and it is a, it is a V2. It's not the best V2, but I do like that we're closing back over the 5 and the 10 as well. And the RSI is, still pretty good. So, all right. Well, it's definitely off if it's high, so it's a good thing we waited a little bit here. So all in all, pretty light on positions, which is fine. Yesterday was such a big move down, concerning. I just don't feel like today washed it all away. All right, so we have 4 minutes. Toby, on your moving averages, do you use SMAs or EMAs? I use both. And after the market closes, Toby, I will get into the details. But, well, I guess we have a few minutes. So basically the 250, the 200-day, the 100-day, and the 50-day, I use those simple moving averages. For the 250, the 200, the 100, and the 50. Those are simple moving averages. For the 20, the 10, and the 5, I use EMAs, exponential moving averages. And also, Toby, in the description of this video, there's a link to a lesson where I talk about all the indicators that I use on my charts, and I go through specifically exactly each one, what I use, what the data inputs are for each one. And so that's just in the description of this video. All right, so we have about 3 minutes. Oh, the other one we have to watch is MO. So if MO does close above yesterday's close with the V1, I would buy MO, but it would have to do that, and it would also have to close above the 30 RSI, and right now we're only at a 29.19 RSI. I know I'm being picky today, guys, but it's important. Why put your money at risk on something that's, subpar? Okay, so I'm going to have the SPY buy. That's going to buy automatically. Qs are fine, I believe, right? So far, yep, still above. Gold, that was a huge stinker today, but still above. All right, so we have about 1 minute. Looks like we're coming off of the highs. So we do have 1 minute. And then after the market closes, everybody, if you have any questions or comments, anything you want to discuss or need clarification on anything, just feel free, go ahead, put it in the comments, and I will answer that the best I can. All right, so I'm going to go ahead and I'm going to buy my 5 today.
Order partially filled. Order filled.
There, and I'm also going to buy it over here.
Order partially filled.
All right, so I got
order filled
at 129.41.
Order cancelled. Autofilled.
All right. So MO did not trigger the V1, nor did it trigger the V2, nor did it go above the 30, but we might get it tomorrow. We'll take a look at it tomorrow. So new position on 5. Is 129.41. That's where I bought that. I will be targeting up here previous high or rejection of the 70 RSI to the upside. To the downside, if I am wrong, I want to be wrong small. This was the washout bar. So tomorrow, if we get a close, the initial stop on this is going to be a close below the halfway of the washout bar. So right here. So it gives a good risk if we're wrong, a small risk if we're wrong, and a nice potential if we are right. And then the SPY we got at 297.62 today. So that will be the overnight SPY trade. Okay. All right. So slightly down today because of the gold trade, which is unfortunate, but listen, that's how it goes, everybody. That's just the nature of trading. You're not going to get them every day, but it was a small loss, and that's what's important, keep things small loss. So, all right. So listen, before I get into the answer session to your questions, your comments, I just want to put in a quick plug each day, let everyone know that I do offer private one-on-one teaching, mentoring lessons in the evening time via Skype. I have had really good success with my clients. I've taken some clients that have lost a lot of money, and I've really turned them around. I offer a 10-hour course, 5 2-hour Skype sessions or one-on-one courses with me live. And, I go through there. I teach you everything I know. Generally, the first part of each Skype session I'll teach. I have the second portion of the 2 hours is I have you teach it back to me. And like I said, I've had really good success. I really like to teach, and what I do here on the live stream, I hope it's helpful, but one-on-one is always better, right? I mean, it's better. You can get immediate feedback, but I think the most important thing with the one-on-one sessions, in the course that I provide is that, initially I have a phone call with the person, just to see if it's going to be a good fit, but I like to know more about that person, why they're interested in trading, what their experiences have been, what their challenges have been, what their goals are. And, then I'll put together a lesson plan based upon the information that they give me. And I think most important really when you distill it all down is that, you hear people say you have to stick to your plan. You have to trade your plan. Don't deviate from your plan. You've probably heard me say it about 18 and a half times today, right? But what I have found with my clients that I work with, when they come to me, they maybe know about a couple different entries, but they don't really have an idea of what a complete trading plan is. And, that in my sessions, in the one-on-one sessions, I mean, that's really my goal, is when you're done with the course that you have a real plan that factors in position sizing, your technical analysis, your emotions, phasing out of trades, all sorts of stuff, right? You have a real solid, legitimate plan that you can follow. And if you have a great plan that you can follow, in the long run, you're probably going to do just fine. So if it's of interest to you, let me know. You can send me an email. You can reach out to me on Skype, but it generally just starts with a free phone call. There's totally no obligation. Just want to get to know you better, see if it's a fit for both of us. And then after that, you can let me know if you want to take the course or not. Really doesn't matter. I hope, I'd like to teach you, but trust me, I'm super busy with courses right now, but I want to put it out there and let you and offer it to you, because everyone that's ever taken the course has really been glad they did. So, and then if you like this podcast today, if you're getting some value, please do me a favor, hit the thumbs up button. It helps promote the channel out to more people, and there's a lot of people out there that need help with trading. So, okay, that's my plug. Thank you for holding through and bearing with me through that. So let's see. So yeah, Toby, I do use SMAs. I do use EMAs. So the 250 is an SMA, the 200 is an SMA, the 100 is an SMA, the 50 is an SMA, the 20 is an EMA, the 10 is an EMA, and the 5 is an EMA. And then again, in the description of this video, I have a link to a lesson that I have on YouTube specifically about all the indicators on my charts and all the data points for each one, so you could set it up exactly like me if you wanted to. All right, Wayne. Hey, Wayne. Good to see you. Wayne says, what do you think about SHOP? Well, I took it in junior high. Does that count? Haha. Okay, so that's yesterday's. I'm going to have to look at that on the other chart. $313.26, and today we are at yeah. So I mean, obviously this is these are two large bars, reversal bars. We did technically had a V1. Here's day one, V2. Here's day one. Day two thoroughly washed out day one, and today did close above day one's close. So that, I mean, that is good. Today's move up came on high volume. That is good. What's the RSI right now? The RSI is 3850. The way I look at this, Wayne, is that most likely right up here, we're going to run into some kind of resistance at the 50 RSI, maybe the combination of the 50 RSI and the downward sloping 20. This is the washout bar. If I would have taken this trade, I probably would have used a close below halfway of the washout bar right about here. I think the risk to reward is slightly better than 1-to-1. On the negative side, we have the 100-day moving average above us. We have the downward sloping 1 ATR channel and the 10-day. This is a tough one. This is a tough one. I mean, there's positives and negatives, but when I first look at this chart, when I very first look at a chart, I usually get an emotional reaction, and my reaction is I feel like there's a lot of resistance above here. So yes, it's a V2. It's a decent V2. It's a big reversal bar, which is strong. But I feel like you're going to have some kind of resistance right in here. I could be 100% wrong, but I don't think I would have taken this trade. Anthony says, I can't recommend the one-on-one strongly enough. Really, by the way, smash those likes. Thank you. Yeah, Anthony is the student I'm working with currently at the moment. Anthony is doing really, really well. Really proud of him. I tried to trip him up the last few calls, but he has everything down pretty much. He just has to get his charts in order, and then he's going to be ready to go. But thank you, Anthony. I really do appreciate that, and it's been really great working with you. Wayne says, good evening, sir. Ha ha. Ha ha. My shop joke? Yeah, I'm kind of torn on this one. I mean, let's take a look at the weekly. It's always good to look at things in multiple time frames. Yeah, we've moved on the weekly. We've moved up nicely. We have come down into the value zone. Very likely we could trigger a V1 on the weekly in the value zone, but I don't like this strong move down. You know how I like him. I like him up, down into the value zone, move sideways, attempt to go down, reverse back up. I just feel like there's conflicting signals here, and I feel like the risk to reward's not great. Wayne, did you take it? Oh, thanks. Looks too risky to me as well. Okay, good. Well, I'm glad I have some confirmation there, because it looks like a big attempt here, but yeah, in my opinion, I just feel like the risk to reward's not great. You know, compare that, Wayne, compare that to the 5 trade, right? I mean, it's very well defined. We haven't had any huge bars. We haven't had any huge down bars, which is good. We're certainly in an uptrend still at the moment. We're in the value zone. We're above a 50 RSI. The risk here is defined and is quite small. And, if this is able to trend, we have a nice potential. I'm not saying it's going to get up here, but we have a decent potential to the upside. So this just makes a lot more sense to me. We'll see. five could get hammered tomorrow. We never know. But that's the thing about trading. You just really never know. All you can do is, do your best to identify a good technical setup, do your best to identify a good risk to reward ratio, position size correctly so that it's meaningful. But if you're wrong, based upon your risk to reward and where your stop is, you're wrong small, and you have the ability, if it does go your way, that it can move multiple times of your risk. But that's all we can do, right? I mean, the only control you have over trading at all is, 1, when you buy something, and 2, how many shares or how many contracts you buy. After that, completely out of your hands. You cannot control it. There's one Trump tweet away from just a big crash, headline news, so the only thing you control really is when you buy and how much you buy. And so my advice would be to buy a conservative amount, so that if you do get into some kind of bad situation, you're going to lose, but it's going to be recoverable. It's very important, everybody, that you can recover from a down move, whether that moves a few days, a week, a month. Because what happens is, generally people position size too large. And then if they're moving up, they're like, great, man, this is the greatest thing in the world. But if they get into an extended downtrend, it really starts to wear on you each day, one day after another, and it really hurts. And then usually you have too much pain. You eventually get out. You probably should have gotten out where your stop was way above, but then you get out and you're so disgusted with yourself and disgruntled about the whole situation. Then you have a nice entry that comes along, but you don't have it in you to take it. And that's usually the time where you have those big moves. I mean, like DDM. I mean, if you guys remember, we had this huge move down from July. All of July was, August was horrible. Well, I position size really carefully here. Yes, I did have a down month in August, but I still kept my wits about me. I didn't get discouraged because I did lose a little, wasn't that much, but if I was so disgusted with everything, I would have never taken this trade. This was a monster trade. And the same thing on DDM, and same thing on Qs, and other positions we had. So if you're beat up and you're licking your wounds from previous big losses that you have, you're not going to want to take those next trades. In my experience, I've seen people go, I just can't take another loss. And generally those are the ones that go up. Hey, Vix Crush, how you doing? Thank you so much for coming by. Hey, if you guys want a good channel, go to Vix Crush on YouTube. I think it's David. I apologize if your name's not David. I think it's David. But anyway, it's a good channel. He was a trader on the floor. He has really good information. And so I would suggest you guys go on over there. But thank you so much for coming by. It's good to see you. How's everything going on your end? Murat says the on balance volume for shop is the same level when the price was 240 in a month. It gave 6 months or so. 6 months of increase, so there might be further down motion on this. I see. Hey, thank you, David. I got it. Okay, good. Woo. Thanks for coming by. Yeah, everybody, go to Vic's Crush. He has some good interviews. He talks about options, some pretty involved stuff on options. Sometimes I listen to that and I like really have to listen to it closely to take it all in because, I do things with options, but not at the level that he does on his channel. So thank you so much. Really nice to see you, David. Max says, and then you chase and then it goes down and the cycle starts again. Max, you sound like you're speaking from experience. I'll tell you what, trading's a tough game, everybody. Gosh, it's tough. Sometimes it's so easy. Sometimes it is so hard. But I mention this all the time, but you have to take the long-term approach on trading, everybody. People understand long-term investing. So far it's worked out really well, but you need to take the same approach with trading. Take the long-term approach, conservative, position size conservatively. Don't blow yourself out in 2 or 3 months if you just happen to get on a down leg. Why do that? How are you ever going to be good at trading if you don't get the experience? You need years and years and years and years of trading experience to really master something. And the only way you're going to be able to have years of experience is if you keep the money in your account and don't blow up. And the only way you're going to do that is to position size so that doesn't happen. Does that make sense, everybody? I know we all want instant gratification. We all want to make a ton of money in the short run. And there's no faster way to lose your money than try to make a lot of money in the short run. Listen to Warren Buffett, they ask him, why do people not want to invest like you? And he says, because people don't want to get rich slowly. And you can get rich slowly if you take the long-term view. So everyone talks about long-term investing, but I never hear anybody talk about long-term trading. That's the way to do it. Keep your money, build your skills. Max, you were talking about MO earlier, and you're right. What did you say they pay dividend? 8%? 8.25% dividend, which is unbelievable. And, I'm a former smoker, and I know how hard it was to quit. And, they have a new product they just launched this month. I'm not advising anybody to start smoking. Trust me, okay? But they have a new product they've been selling in Japan called the IQOS system, and it's a tobacco product. It's not a vape product, but this device heats up the tobacco. It doesn't burn the tobacco. Burning the tobacco is where you get all the carcinogens and all this kind of stuff. And that's why you get the coughing and the hacking and all that stuff. But this actually just heats it up, so you get this vapor. And I've done a ton of research on this. I've talked to people in Japan about this because it's a huge seller in Japan. I think it's taken over 30% of the entire smoking market. And I've talked to people, said, I've been a smoker for 20 years. I quit in one day when I switched over to this. I don't hack anymore. I don't cough anymore. You don't have any ash. It doesn't smell like smoke. And they just approved it for sale in America this month. So it'll be interesting to see how that goes. So that being said, I'm still not going to trade. I'm still not going to buy MO just based upon that. But I have a feeling, like I said, as a former smoker, I know how hard it is to quit smoking. And so, if they can give you something that's tobacco that from my experience from talking to people makes them feel a lot better, I think that has a lot of potential. But we'll see. Not advocating smoking. Don't get me wrong, please, right? We're just talking about the economics of the potential of a new type of product. Well, you can't get rich like Buffett unless you start with a few million. Warren Buffett did not start with stock. Yeah, but my point. Rich is a subjective term, but you can start with $10,000 and in 10 years you may have multiples of that. It's all relative. He started buying stock in the 80s when interest rates were 18% or so. That was start of the biggest allocation, which lasted until now. Asset rotation. Yeah, but you get my point, Max. The main point is people blow up in the trading world because they take too large of positions and they run into a downtrend and they probably add to it and they lose and they're disgusted and they just quit. But just like the chart that I showed you, you know, this chart here, if you have an edge, let it play out over the long run. If you would have started here and position size too high, too large, this would have kicked your butt and you probably wouldn't have stayed in. You probably would have quit and you would have missed out on that. So it's all relative. Okay. Anybody have any other questions today? So I'm looking forward to tonight. I have 2 calls tonight with potential clients. I have one in Singapore. And actually, I'm having a call with him just to help him out. He's not a prospective client, but I just want to help him out. And the other one, very interested in taking the course. So I'm glad for that. And by the way, you guys, if you guys ever have any questions, anything, you're in a bad position with your trading, you're not sure what to do, feel free. You don't have to be a client. Just reach out to me. I'm here to help you guys. I've seen so much destruction in my life with other traders and what it's done for them, or done to them, their family, their emotional life, their financial life. And, I've been fortunate to have been in this game for a long time. And so I really started this channel to help you guys. So if you're in a bad spot and you need someone to talk to about something you're going through with trading or some help, doesn't matter if you're a client or not, just reach out to me. I'm here for you guys and I'll help if I can. Anthony says, got to run. Have a nice night, all. Thanks again, Greg, for the phone number. I'll see you tomorrow. Yeah, I hope that helps. Say hello to Donnie for me. All right. Hey, Johnny, what's up, buddy? No stories today? Johnny has like the best stories of his trades. No good trade story today? Johnny has some monster trades. Frank, are you a fan of the Darvis box? Well, by the way, if you guys do not know who Nicholas Darvis is, it's a great book. Frank, maybe you can help me. Maybe you can help me with the title. Steve Burns wrote a book. I believe Steve wrote a book or a version of the book, How I Made $1 Million in the Stock Market, or How I Made $2 million in the Stock Market. It was about Nicholas Darvis, kind of trend trading. But yes, I mean, am I a fan personally? Well, those are more breakout trades. I'm not so much of a breakout trader. Those are longer term approaches using the Darvis boxes, once they break out into a new range, holding them until they're into a new range. But that's more of a long-term approach. Certainly a good approach. He did really, really well with it, but it's just not my type of trading. Remember, everybody, you have to find a trading approach that fits your personality. Long-term trend holding, does not really fit my personality, but doesn't mean it's not good. It could be great, but it just doesn't fit my personality. You really have to find an approach that fits your personality. Murat says, How I Made $2 million. Okay. Yeah, I read that, and I believe Steve did an audiobook. I could be wrong now. This is a while ago. Johnny says, just waiting for stuff. Bought some VWM yesterday for a long hold. Let's check it out. VMW. So you bought it yesterday. All right. Well, look, you bought it in the value zone. I'm glad to hear that. Better than buying it up, in these elevated rubber band levels up here. Hey, you're already up almost 2% on it. Nice going. Okay, Murat, thank you for coming by, my friend. Thank you for setting me straight on the title of that book. Oh, Dustin, do you ever reverse your process in a bear market? Example, V1s to the downside. Dustin, it's a good question. I'll give you an example. I don't do a lot of I don't do a lot of shorting. I think I've had 3 or 4 shorts the entire time that I've had this podcast. If I remember right, I think we were right on 2 or 3 or 3 or 4. But yeah, I really have to have a perfect setup for me to go short. You know, the market is kind of constructed in a way to have an upward bias, and I like to go with that bias. But I do use V1s, V2s to the downside, but generally not to short, but to get out of positions. Like here's an example of Johnson & Johnson, right? I bought Johnson & Johnson here on the 18th when we had this V1 to the upside. It moved up nicely, moved up nicely, moved up nicely, hit some profit targets. But you see how yesterday, we had this V1 to the downside. Here's day 1, here's day 2. Day 2 washed out, day 1 closed under. I didn't go short there, but I use V1s, V2s to tell me to get out of a position if I'm long. Does that make sense? So I don't really use them to reverse my process and go short, although sometimes I do, but not very often. But the majority of the times, I will look at a V1 or a V2 to the downside as a red flag, as a reason to get out of a long position, but not to initiate a short position. Does that make sense, Dustin? The old joke is I started with 4 million. Yeah, you're right, Frank. That's the old joke with airlines. How do you make $1 million in airline stocks? Start with 2 million. So I hope that makes sense, Dustin. Makes perfect sense. Thanks. Okay, good. All right. Well, unless there's any other questions, and if you have, just type them in. But let me say goodbye to everybody. Dustin, thank you for coming by. Nice to see you. Hope you keep coming back. Frank, thank you. Always good to see you. Murat, good to see you, my friend. Always look forward to Murat's comments and some of his trades. Johnny, hope VWM starts going up for you. Always appreciate you coming. Always like your stories as well. Anthony, good seeing you, my friend. Hope you have a good day. Hope you have a good call there with Donnie. And Max B, thank you. Always appreciate your comments and your take on things. And I hope you keep coming back. And David from Vix Crush, thank you for coming by. You guys should check out Vix Crush. He has a really interesting YouTube channel talking about options and markets. Wayne K, good to see you, sir. We'll watch shop, see what happens. Toby, thank you for coming by. Appreciate your questions. If you have any other questions in the future, please let me know. Marco, good seeing you, my friend. I'm still waiting for a question out of Marco. If you have any questions, you just let me know. JT, good seeing you. And Steve Burns, always an honor to have you here, sir. Appreciate everything that you do with your books, with your website, newtraderu.com, and everything that you provide to us, and good content on Twitter. But I can't say enough good things about Steve Burns. Steve and I worked together for a couple years. He taught me one-on-one, really changed and improved my trading to a high degree. And so I owe a lot to you, my friend. Thank you very much. Max says, thank you for this broadcast. Hey, you're certainly welcome, bud. Okay, I'm going to get out of here, hit the trails. So go out and do something nice for somebody today, everybody. Hold the door open, say hi, be nice. We need more of that in this world. We really do. And it's going to be interesting to see what happens with the market here. Like I said, pretty light. We did buy SPY today, and we did buy 5. But all in all, pretty light. Just going to be careful here with this volatility. So remember, we want to stay in this for the long run, not for the short run. Oh, you're welcome. You're welcome, Dave. Thanks, buddy. You're welcome, Toby. You're certainly welcome. All right. You guys have a good day, and hopefully see you guys tomorrow. Okay. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.